Welcome to this session. And today we'll be seeing a unique strategy which you can apply on a day-to-day basis to generate consistent returns over the course of the time. So don't expect to make a big fortune from it, but for sure you could, if you do it consistently every day, you'll be able to make a 5% monthly return on average. That's for sure. So this strategy is called as mean reversion strategy. And I will explain why we have to apply it and when you have to do the entry, what should be your stop loss, what should be your target, everything will be explained over here. So if you see our day-to-day life, if someone is performing exceptionally well for a course of time, it's common that his performance might diminish, or maybe he would go off the color for a while. It's very common for all of us. Just think about Rohit Sharma. In 2009 World Cup, he hit 5 centuries and he just needed 27 runs to close the record which was set by Sachin in 2003 World Cup. He just needed 27. But when he hit the century in the last group match against Sri Lanka, it was almost sure that next match he is bound to fail, because in the 9 group matches that India did play, one was washed out, and out of the 8, he hit 5 centuries. So 5 centuries out of 8. So somewhere a failure was supposed to come, and unfortunately that did happen in the semi-final against New Zealand, where he did fail miserably and he got out for 1 run. So this happens everywhere. Forget about Rohit Sharma now. You take a big movie star. If he is delivering back-to-back hits on a trot, let's say for 5 or 6 movies, if all of those 5 or 6 movies are becoming blockbusters, don't book the ticket for the 6th movie. High probability that will be a disaster. So that happens everywhere. Same thing happens in all the sport. If Lionel Messi is scoring consistently for 10 to 12 matches, there is a probability that next 2 or 3 games he would end up in delivering only 1 or 2 assists. It's common. It is there everywhere in nature, in day-to-day life. So same does apply to stock market as well. If stocks are performing exceptionally well, they would try to retrace back. So we are gonna discuss that strategy today. So this strategy is called as mean reversion strategy. This can be used for day trading, and I will tell you how to filter out the parameters. So what you have to do is you have to apply 2 parameters. First of all, whenever you do day trading only on those stocks which are enlisted on F&O segment, future and option segment. Why? Because the F&O stocks does have the best volatility. If you go and invest in some normal stocks, because there are around 5,000 companies listed on BSE and around 2,000 companies listed in NSE. So you cannot go and trade on all these stocks. Whenever you do day trading, make sure to do the day trading in F&O stocks. That's the point number 1. Point number 2, you have to consider those stocks which have appreciated at least 3% a day. That means on a single day, this stock is appreciating a bare minimum of 3%. This is the next criteria. Third thing, what you have to do is you have to consider those stocks which are having the base price as at least 50 rupees, and don't do trading on those stocks which are trading above 5,000 rupees. This is another criteria. So we have these criteria set, and then we need to include 2 indicators. So in studies, you could see that I did add 2 things, one simple moving average and one RSI. So simple moving average, you could see the graph over here. So I have taken the 200 days simple moving average. So what it does mean is the stock is trading above the 200-day moving average. So the current close price of this stock is above the average of past 200 days closing price. And then we have one last parameter to consider. The 2-period RSI should be greater than 50. As you could see, if it is trading well above 80. So if all these criteria are matching, you could, on next day, you could short sell this stock. This is not just for NSE or any particular exchange, this strategy can be applied universally across any stock exchange. But when you actually start, applying it, you will come to know that maybe, when you do your own thesis, you will come to know that, you can tweak the parameters, a little bit better. So let's see. So now I am, have zoomed into the stock. So, and the interesting part of this thing is, if you are using any scanners, you will be able to, you can filter out the stocks on its own. No need for you to go and validate all the 150 stocks which got enlisted in F&O. So on charting, I have opened those stocks which fall under this criteria. As you could see, what all things we are testing over here. We are first of all we are checking whether the stocks fall under F&O segment, then whether the simple moving average, whether the closing price, that average price is greater than the 200-day moving average, whether the 2-period RSI is greater than 50, whether the stock did appreciate at least 3% on last day. Then we are also checking whether the stock price is trading between 50 rupees to 5,000 rupees. So when I entered this, I got 3 stocks: Bajaj Auto Limited, Apollo Tires, and Hero Motor Corporation. I have opened Bajaj Auto Limited. So now the next question: where should I enter, and where should I exit? So here you could see that the highest price is 4130 and the closing price is 4089.5. So what you have to do is, you have to take your calculator, and now I know 4089.5 is the closing price for Bajaj Auto. So what I will do is, I will enter I want this stock to appreciate 1% more from the closing price. For that, 1% is 40.89. Okay, so I'm getting my entry price here. So if Bajaj Auto is going above 4,130 rupees 40 paise, I will short sell this stock. I got the entry point. Now, what is my stop loss and what is my target? We'll come to that. So 40.89 into 3. 122.67 rupees is my stop loss. So I will enter at 4130.39 and my stop loss will be 122.67. And what will be my target? My target should be 122.67 into 2. Into 2, it will be close to 245 rupees. So I have my stop loss defined, I have my target defined, and you should always try to take 1:2 if you are going with this strategy. So now let's say, the second stock, same way, Apollo Tires. Apollo Tires, it did appreciate by 6.72%, and the last traded price was 231.9. So what I will do, I will open up my calculator again, and now I need my entry point. 231.9 plus 2.31. So if the stock is appreciating 1% by tomorrow, that is 234.21, I will short sell the stock. Now, what is my stop loss? 2.31 into 3, right? Into 3. 6.93 is my stop loss. I'm ready to commit 6.93 for this trade. And what should be my target? Into 2. 13.86. That's it. Now, the last stock. Last stock is Hero Motor Corp. So Hero Motor Corp, what is the price? 3374.9. 3374.9. So I will see whether the stock will appreciate 1% tomorrow. So the 3374.9 plus 33.74. This will be my entry price. Now to calculate the stop loss, 33.74 into 3. 101.22 will be my stop loss. Always round to the nearest digit, where whether all of us know stock market ticks, with every 5 paise, right? So 101.25 or 101.2 will be my stop loss. Into 2. So 202.44. So I will keep 202.45 as my target. As simple as that. So this is how we should work. And you could also see if you apply these filters, you could also backtest the results. If you go to the backtest, you can see the data which got captured for last few months or years. You could go and cross-check it. One thing I can guarantee you, if you do it on a daily basis, monthly, you could make 5% if you do with due diligence. So that's it. Any doubts, any questions, any comments, any queries? Feel free to ask.